Namaste and welcome back, traders. On Friday's trading session, May 17th, we saw the Indian equity markets trade in a rather sideways fashion, with both benchmark indices closing slightly in the red. While the overall movement was muted, we did observe significant action within specific sectors and a firm close for most global indices. Let's delve into the details to set the stage for our market outlook for Monday, May 19th. The Indian benchmark indices experienced a day of consolidation, with neither bulls nor bears gaining a significant upper hand. The closing figures indicate a marginal downward bias. The Nifty 50 index closed at 25,019 levels, registering a mild loss of 42 points or 0.17%. Similarly, the Sensex ended the day at 82,330 levels, down by 200 points, representing a slight decrease of 0.24%. This sideways movement suggests a degree of caution or lack of strong conviction among market participants heading into the weekend. Now let's examine the sectoral performance, which reveals a mixed bag. While the main indices traded sideways, we saw notable movements within individual sectors. The realty sector was a clear outperformer, gaining a solid 1.63%. Top gainers within this space included Anantraj, Raymond, and Brigade, which were all up above 2%, all attracting significant buying interest. Interestingly, Phoenix was the only stock into the reality space that closed mildly in the red, suggesting sector-specific positive catalysts were at the play for the majority. This positive momentum could continue onto Monday. Media sector, on the other hand, also saw positive movement with some divergence. It also showed strength, rising by 1.11%. Key players like Dish TV, PVR Inox, and Network 18 all recorded gains above 2%, indicating positive sentiment in the entertainment and broadcasting segments. However, Saregama bucked the trend and lost more than 2%, suggesting stock-specific factors which were at play. The energy sector also closed higher by 0.85%, primarily driven by significant gains in SGVN and Adani Green, both shooting up 5%. This strong performance in renewable energy and power generation could be a theme to watch on Monday. On the other hand, Tri-Turbine and Gujarat Gas closed in red, highlighting the diverse nature of this sector. The FMCG sector saw a modest gain of 0.66%, with companies like Tata Consumers, Dabur, and Colgate Palmolive making good progress. However, there was selling pressure in stocks like Patanjali, VBL, UBL, and Radico, indicating a selective buying approach within this traditionally stable sector. Lastly, the IT sector was the main laggard, which was down by 0.84%. While Oracle Financial Services and Persistent managed to close in positive territory, the majority of the big IT names, including HCL Tech, Infosys, and Mphasis, dragged the sector down. This weakness in IT could be the point of concern for Monday, especially if global tech cues don't provide strong support. Though the Nasdaq, closed positive, but we have to see on Monday how the overall IT is going to perform. Now let's take a look at how the global indices fared, providing us with potential cues for the coming trading session on Monday. While most global indices closed in positive territory, we did see some weakness in parts of Asia. Hong Kong's Hang Seng was down by 0.46%, and Shanghai also closed lower by 0.4%, whereas Japan Nikkei remained largely unchanged. This mixed Asian performance might lead to some cautious sentiment in the early hours of Monday. European markets, on the other hand, had shown modest strength and it closed the day in positive territory, with the DAX up by 0.30%, CAC gained 0.42%, and the FTSE rose by 0.59%. So overall, all the three exchanges or the indices were on uh, good performance of roughly around 0.5%. Overnight in the US, the major indices closed with solid gains. The Dow, which was not participating or performing from the last two trading sessions, however, had shown performance and was up by 0.78%. The S&P 500 also gained 0.70%, and the Nasdaq, which had been continuing the trend positive territory for almost like a week now, also rose by 0.52%, but it was not significant when compared to Dow Jones as well as S&P. So all the three indices on major indices on US markets had been on a positive hand. Now, considering today's sideways trading in India, let's analyze through charts and open interest what we might expect for Monday, May 19th. So here you see the Nifty 50 index, which is on a daily candlestick pattern. Now, as we saw previous day, there was a significant buying, and that overall buying sustained for the previous trading session. However, on Friday, the anticipation as well as as per our previous video for 16th May, it was expected that on Friday session the markets would be opening either gap up or at least wherever it had closed, and from there it would continue. However, it came to surprise that the markets slightly opened lower, and then there was a sideways move, and overall we were expecting on the higher side there could be a possibility that the markets would come up, and then from there we could see a significant up move to continue. However, that didn't happen. The markets overall traded in a range and then closed on a negative note by 42 points, which is quite modest. But tomorrow's or Monday's trading session is going to be definitely significant based on how the market is expected to open, and from there on whether it would be trading on a positive note from this zone at 25,000 levels, or it would start falling below the 25,000 zone. Now, since 25,000 has been a crucial level and a kind of decider whether the market is going to move from here on onto the its next upward leg, or if there comes a significant selling pressure, then we would start inching towards unable to hold 25,000 levels and could approach towards 24,800 odd. So Monday is surely going to be quite significant for the markets, and Monday's close would be the decider as to where the operators or the big institutions are expecting the market to move from here on. Now we would discuss a significant like of shift in terms of the FII as well as DII investment in the cash markets, but when we come to that particular segment we will discuss in details. So until we move towards that particular segment, ensure you watch the video until the end to understand what has shifted in terms of the cash market investments, and despite that why we do not see a significant up move in the major indices. So we will discuss that, but yes, till now if you're liking the video, please hit the like button, and if you have not subscribed to the channel, do subscribe. Now let's see from the perspective of open interest, where do we expect the markets to head on the Nifty. Now if you see there is some open interest additions that had got added across all the strikes at the higher levels beyond 25,000 levels on Friday. Now at the major 500 points we see significant up move in terms of the open interest additions. As you could see, for 25,500 odd levels, roughly around 40% additions to 45% open interest additions on the calls have been done. Similarly, at 26,000 levels, roughly 40% of open interest additions built up was seen. So what this suggests, so since Friday was the first trading session for the 22nd May expiry, but we have further 4 days left. So now in case if we start trading below 25,000 levels, then we would see that the call writers would start putting a lot of pressure, and then you would see a significant built up in the open interest positions on Monday as well, which would act as a strong resistance then. And each time whenever further Nifty starts to cross 25,000 levels, there would be a significant selling pressure that would come in. So we have to closely monitor tomorrow. If Nifty closes below 25,000 levels, and that too in a significant way, like 100 to 150 odd points, then somewhere we are going to be in a trade, a range bound kind of trade, where we might hover in the range of 24,600 odd levels, and then approach towards 25,200 odd levels, which we had not moved, but yes, we might move in this overall range of 600 points for this entire week's expiry. So Monday is going to be significant, and then Tuesday we will any which ways have Sensex expiry, where we would anticipate some volatility to come in. So from the perspective of PCR, we are at 0.8 overall, which is quite positive to bullish. However, at the money PCR is just 0.62, which is not that significant and bullish. So yes, we have to closely watch. These are the reasons why maybe we could see some selling pressure on Monday could approach if overall the Asian markets open down significantly down, like maybe 0.5 to 1%, and then even European markets following the suit and opening in negative. If that happens, then our closure will be below 25,000 levels itself. So let's see tomorrow. Now from the perspective of Sensex, so Sensex as well gave a doji, and since this doji is below the previous day's high, so this could be a decider. So doji means it can continue the trend, or it could act also as a reversal. Now since for last 3 trading sessions, in fact even yesterday's trading session, Friday's trading session, we significantly saw the markets were altogether tired, and we were not able to cross the previous day's high. So until and unless that doesn't happen on a significantly note, then we are not going to have another leg of up move. So there should be a strong strength whenever we move at the higher levels and close. So since 82,500 we have already crossed, and if we do not hold significant strength at that levels, then there are high probabilities for it to get weakened by the call writers who push significantly the markets to move down. If they're and if they succeed, then there are high probabilities that we could on a given day see significant sharp sell off too. But as of now we have not come to that stage. For us, we have to closely monitor 82,000 odd levels. In case if we start trading below that, then that is a clear signal of selling pressure coming in. Okay, and then we would trade in a range bound kind of scenario between 82,000 odd levels to 82,500 to 600. Either it will not move up, nor neither it will move up, nor it will significantly fall down. But yes, the decider is going to be 82,000 at the support side, and on the resistance, of course, we are expected to have a next leg of up move. So as we had discussed previously, our previous resistance would be at 84,000 levels. Till then there are high probabilities for Sensex to easily climb up. Now let's say from the perspective of open interest. So on open interest, despite Sensex trading below 82,500 odd levels, which it closed on Thursday session, we still do not see significant open interest taken down for the lower levels, that is 82,000 odd levels and all. So only at the 82,500 slight unwinding we had seen on the put writers side. However, despite Sensex crossed like 82,300 odd levels, we do not see a significant additions on the open interest on the put side getting added at in the range of 82,500 and above. So if we see some significant open interest positions coming in there, then that would suggest that the put writers are gradually building significant positions at the higher side, and one fine day we would be seeing abrupt moves which would act as a significant deterrence for the call writers. So as of now, some strength is very visibly seen on the call writers, and they have added good open interest positions, which suggests that some selling pressure is there. Though at 82,500 we see unchanged kind of positions, but yes, the call writers are on the upper hand, and they would have a better say in terms of giving a significant push to Sensex when it tries to approach 82,500 odd levels. So on the PCR front, we are overall positive at 1, which is bullish, and also at the money it is 0.81, which is bullish, since we see both open interest positions on the calls as well as on the puts have been added. So some positivity on the PCR ratio we could see. Now from the perspective of Bank Nifty, Bank Nifty, though it closed, it almost remained unchanged by closing 0.70 points, but overall we see a kind of positive doji here, and compared to the previous trading sessions, though the major indices like Sensex and Nifty were quite bullish, but Bank Nifty was not so bullish. But we believe the next leg of rise in the major indices could come from the banking stocks. So the anticipation is that the big 3 or 4 banks has to be closely watched. If we start seeing some bullishness in those stocks, then it is better to jump onto it and then continue the ride. So we clearly expect 56,000 levels to be crossed, maybe by this week or by end of next week. So before the expiry, May month expiry, there is high probability that Bank Nifty could close beyond 56,500 odd levels. So there is a 1,000 point of up move that is expected on Bank Nifty, and it could come on any given day. Just that the overall top banks has to be closely watched. Once we see movement happening in, this would be a one-way rally for all those banks. So a close watch has to be kept on all the significant banks, which is having huge weightage on the Bank Nifty. Now on the lower side, our first support should be 55,000 odd levels. In case if Bank Nifty trades below 55,000 levels, then some cautious approach to be taken, and not hold significant long positions. Might be we trade in a range bound kind of scenario for a week or 2 weeks, and then if any global news that comes in which is negative, then we might approach towards the lower levels too on Bank Nifty. But yes, compared to other indices, Bank Nifty seems to be having still the strength. Now from the perspective of open interest, so we as I have been telling that there is significant buying interest on Bank Nifty indices. So despite some kind of selling pressure on the major indices, still there is addition that had happened, slight addition here as well, and then here as well at all the 500 strikes we see some open interest additions that had happened. Similarly on the call side we see slight open interest positions, but compared to the kind of strength that the put writers have been holding at 55,000 levels, and at every 1,000 points, similar strength is not seen at the higher levels. So as you could see, if I draw a kind of horizontal line, you would be able to see. So there holds some weakness at the higher level. Once we start crossing 55,500 odd, that is when we would see good pressure that will build on the call writers, and they would significantly unwind the positions until maybe 55,500 to 56,000 odd levels. So and we could see a significant open interest positions coming in on the put side at every 500 levels, and there is also some open interest positions that got built until 57,000 on the put side. So that suggests that there is something definitely cooking up in the banking stocks, and one fine day we will see that up move coming in. So on the PCR front, we are at 0.9 overall, as well as 0.94 at the money, which is quite bullish and positive. On the FINNIFTY, again we have doji, but it was unable to cross the previous high. So we anticipate it could be upward rally in case if we cross the previous day's high around 26,000 6 to 700 odd levels. Once that happens, then further we would see the up move coming in, and then we would be crossing this 52-week high of 26,800 odd levels. For the support, we would be seeing some support emerging at these levels, 26,100 to 200 odd levels. In case if we see FINNIFTY coming here, be cautious, because there is anticipation that we might trade sideways for the May month. But yes, along with the banking stocks, the NBFCs are also expected to leap onto that next up move. But yes, we will have to see whether it would trade in tandem with the banking stocks, or it would be taking a backseat. So overall, even FINNIFTY is positive, and the anticipation is we cross 27,000 before the May expiry. Now, from the perspective of open interest, additions majorly are only seen at the higher level. So we see at 27,500, 50% open interest additions on call side, and some slight 10 to 15% additions at 26,500 odd levels. So overall, we are hovering in the range of 26,400 to 600 odd levels. Once we cross 26,500, we will see significant built up on the put side, and then that would be the next trigger or the leap for FINNIFTY to move towards 27,000 odd levels. So overall, we are still yet to get those significant cues from these strikes on the option interest built up. So if the open interest on the put side increases further for the at the money, or slightly below the at the money, then there are high probabilities that we are going to hold until the May expiry for 26,000 odd levels, and we might not significantly fall from there. We might consolidate, trade in the range bound kind of scenario, give up move until 26,600 700 odd levels, and then further from there we could see some selling coming in. So we might trade in this overall range of 26,000 to 27,000 for this May expiry. So on the PCR front, it is 0.7, which is not that significant positive. At the money, it is 0.79 or 8, which is still okay. So we have to see how the NBFC stocks perform, and if any of the stocks would be the leaders who can take up the FINNIFTY index towards maybe 26,500 odd levels on the first place, and then further cross the up move from there on. So now our very significant and important topic, FII and DII movements. So it is quite interesting to see that despite a kind of tepid moves that we had, uh, there have been no interest or significant buying that was seen from the FIIs on the index futures. In fact, they have further continued their shorts and close the still hold 23,000 odd levels as open interest positions on index futures, which is not positive. On stock futures, they have been strongly holding 18 lakhs 93,000 positions, which have been continued from a very long time. On the call options, they are on the long side with 1.67 lakh contracts, but on the other hand, on the put options, they are again long. That means there is no significant interest at all from the FIIs on the options index investment perspective. So there is indecisive kind of trade what they have carried for the weekend. So could be because of the weekend volatility or weekend news, that is when they did not carry any positions. Proprietary traders, on the other hand, are short on index futures with roughly around 20,000 odd contracts. On stock futures, they have not been, quite bullish, so just holding 2.18 lakh contracts. On call options, in fact, they are, long with 48,000 odd contracts. And on put options, they are, short by 20,000 odd contracts. So this suggests that it is the proprietary traders who are driving this market on the long side, and they have been holding these positions previously on the Nifty expiry too, and on Friday also they carried long positions. So if markets are supposed to major indices are supposed to perform good, then it is the proprietary traders who are going to back the biggest of the profits. So they are still holding 68,717 contracts on the long side. Retailers or clients, on the other hand, have mildly, added positions on index futures to the tune of 11,000 contracts. On stock futures, they have been bullish from a very long time and holding 17.02 lakh contracts. On the call options, they are short by 2.16 lakh contracts, and on the put options, also they are short. So net they are holding just 21,700 odd contracts of shorts. Not so significant given the kind of trading that we had seen on Friday. If on Monday also we see similar kind of indecisive trades, then overall we can maybe anticipate that the markets would trade in a range bound scenario at least for this week's expiry, because we had already seen a lot of trending moves that had come in. So at 25,000 levels, maybe we would hover for a week or more, or maybe in between we can see some good spikes approaching towards 25,300 to 400 odd levels, and then selling pressure coming in from there, and then trading in the range of 24,500 to 25,500. So this is high possibility because we had seen significant up moves coming in from last couple of weeks, and majorly it is the FIIs who have been riding, FIIs and proprietary traders. So some tiredness we would see in case if Monday closes below today's or Friday's close. Okay. Now talking from the perspective of investments in the cash market. So DIIs have significantly bought 5,187 crores. But the point here to think is, despite 5,000 crores was bought, and also FIIs have bought to the tune of 8,831 crores. But still, why was the major indices did not perform? This is a big question. Now, what we anticipate or analyze is that there was a good buying momentum that was seen from the FIIs typically from last 3 weeks almost, and this money was pumped in majorly on the indices. That is, and despite the short kind of investments that they have brought it from the significant selling what they have done over months together, still the markets or the major indices climbed up significantly, despite just 40-50,000 of crore investments that they had made. However, when they were selling at the higher levels from 26,400 odd, they have sold to the tune of like 1.5 to 2 lakh crores, and with that kind of heavy selling, they were just able to pull down the markets for 3,000 odd points, 3,000 to 4,000 odd points, right? But with just 50,000 investments in the cash market, the markets have already run up 3,000 points from the lower end of 22,000 odd. So this suggests that some operators on the FII side have significantly taken positions on the major indices and the top cream layer stocks, which has huge weightage on the major indices like Nifty Sensex. That is the reason we saw a significant up move. Now there could be some rotation that we would be seeing, because still the mid caps, small caps and all are at the lower end, down maybe 20%, 30% from their previous highs. So some shift is expected to happen from here on, though you would be seeing significant cash investments happening from FIIs as well as DIIs. Do not get confused, and take positions accordingly onto your index options. Rather, there would be a disconnect between the cash market investments and the index movements that we would be seeing in. So have a close watch on how the indices are expected to perform, and if you see some rally coming in on the other broader markets, so that means there is a shift that has already happened, and we might not see any movement coming in on the major indices like Nifty as well as Sensex. So this is the major eye popping thing that you have to continue to track. In case if you see those shifts coming in, then we might hover in a trade, range bound kind of trade, for 2-3 weeks from here on. So that's it from our side in terms of analysis for today. So while Friday's session was relatively quiet for the headline indices, the underlying sectoral movements and the strong global cues, especially in the US, suggest that Monday could see some decisive action. So stay vigilant, track the global cues closely, and also the internal shift that we had discussed just now in terms of the cash market investments by the FIIs as well as DIIs, and have a focus on the sectors and stocks that showed significant up move in the last 1 week. So we would see some buying interest coming in on those sectors as well as stocks in the coming week too. So let us know what are your expectations for the Monday's trading session. So share your thoughts and strategies in the comments below as to what you are expected to do. And if you found this daily market update insightful, then please do hit a like button and subscribe to our channel for more in-depth analysis, and hit the notification bell to stay updated. Have a great weekend, and we will see you back on Monday.